Hello, everyone, and welcome to our K-1 Pass-Through Entities series. I'm David Stauffacher, the Senior Credit Trainer with Lenders Online Training, where we help lending and credit professionals say yes to good loans and maybe steer away some for not-so-good loans. My colleague and fellow Senior Credit Trainer with Lenders Online Training, Joe Davis, is joining me today. It's great to have you, Joe.
Thanks, David. Great to be here. Great to talk some more about pass-through entities.
Awesome. Joe, we love it when we get questions from our viewers, and we do receive a lot of them, so I appreciate that. And it helps us really kind of ensure us to answer the tough questions when we're providing them some context to their underwriting challenges. Hopefully it helps them. It must be because they're asking more and more questions. So, Joe, what is on their mind today?
Yeah, I agree, David. I thank you to everyone who uses the Ask the Experts function. We love getting those. We love addressing those. David and I just love rolling up our sleeves and talking about those with people. So keep them coming, please. Today, we're addressing a question about Schedule B on the 1040 tax return. Particularly, how do you handle pass-through interest income? David, what are your thoughts?
Great question. I think it's important to remember that any pass-through interest income, I'll say in almost all cases, the cash isn't actually received by the individual. Now, the IRS treats the scenario as if the individual did receive it because it wants to figure out what you're going to owe on taxes on that. So it's responsible that if I'm the individual, I'm going to have to pay tax on that income. And that's why it shows up on the tax return. But actually, the same could probably be said. You talked about interest income. It could be for dividend income, too. And that shows up in the Schedule B, as well as share of operating income. Now, that goes on the Schedule E, but it's all passed through. So for me, a quick answer. In all cases, I'd probably say I don't include any of that cash inflow to the individual's cash flow. What about you, Joe?
Agree completely. It's not cash to the individual, so I don't include it there, right? Now, the owners did very likely get some cash from the company, just not through any of these pass-through methods. Maybe they got some wages, just distributions, withdrawals, guaranteed payments. Maybe they loaned money to the entity years ago and they're getting repaid over time. Those are all ways that owners take money out of entities. Those are all cash inflows for the owner, cash outflow for the company. But anything that's passed through, Schedule B, interest, dividend, to your point, Schedule E, don't want to include it. All these other things, absolutely do include it. Now, all this washes out in the global scenario, right? It's a cash outflow for one, cash inflow for another. It'll wash, but it's really important to determine actually which entity generated how much cash or used how much cash, because you want to see your primary borrower, the primary payment resource, and then you want to see what's secondary or tertiary. So David, turn it back to you.
Definitely. And as we said before, it's often difficult when we're underwriting loans to small businesses, especially to distinguish what is business from personal. There's a lot of stuff that gets intertwined together. I get that. And that's why we as lenders, we basically, for caution, we ask for personal guarantees when those are involved to tie everything well together. So lastly, I want to expand a little bit on today's topic, a slightly different context to pay the pass-through interest income. I'm probably going off a little bit off script here. That basically, we understand that pass-through interest income is entity earns the interest, right? We have to pay tax on that. So that shows up on our Schedule B through the K-1. But interest income for what if I was actually borrowing to the entity, so the business actually has to pay me back principal and interest. That too will show up on the Schedule B. Now, it may not be on the Schedule K-1 we're normally looking through, but that's interest income to me. Most likely it's going to be cash. So we just have to understand there's a little bit of a twist to that. And if you see that type of interest income from maybe the company per se, we'd want to know what specifically it is at the K-1. Is there a note involved? And if there is, we'd like to know the documentation and understand that potential cash flow. So a little bit of a twist there when you see interest income on that Schedule B. It may be loan related. So I would just check that out as well.
Yeah, ideally, the CPA preparing the tax return would say from K-1 on the Schedule B and list that out. Doesn't always. It's not a requirement. So it's not always. It's not hard and fast. So to your point, David, you can't just see it and say, oh, no, that's pass-through. It's not always pass-through. You have to do a little digging sometimes.
Awesome. So there you have it today. How do you handle pass-through interest that you see on the Schedule B? Kind of a short one today, but if you need to know and understand more about K-1s and the different type of entities that follows through on, check out our live stream series. We have done a lot of them, and we'd love to be able to have those conversations. Also, if you're looking for some foundational training, check out lendersonline.com/talk. Give us a call. I'd love to be able to show the variety of things that we can do to help you, your team, and get confidence in underwriting the various credit relationships that you are doing. As a final reminder, I just want to say we appreciate all your comments and your questions. That's why we do what we do. Keep them coming. Let's continue the conversation. So you can send us anything to experts@lendersonlinetraining.com. That's experts@lendersonlinetraining. Love to hear from you. Thanks all for coming. Until next time, have a great day. Bye now.
Bye. Thanks, folks.